Good morning, folks. It's Hari Swaminathan. It's August 29th, Thursday morning, around 5:15 a.m. Futures are looking a little up. I wanted to make this video to uh, lay out a general plan for September because there's a lot of stuff going on in the world as well as the United States. So there's a lot of geopolitical tensions. Syria is in the focus, and the U.S. might attack Syria, as well as we have our own problems here in terms of the debt ceiling, the Obamacare, and all of that stuff. So a lot of stuff going on. So there's going to be volatility. You can see the VIX has climbed up to 16 and a half. It touched 17 a couple of days ago. So in general, even though yesterday the markets were up and today the futures are up, but regardless, I think you have to look at the downside. So I want to also talk about a concept called beta of stocks, because this is important when there's a market sentiment shift, and if you feel that there is going to be volatility, how you choose the trades and how you choose stocks and what kind of strategies you choose becomes important. So let's take an example. If we look at, and the way you look at beta, first of all, what is beta? If you look at here on any stock under the Analyze tab, you'll see this beta column right there. So it's 1.2. The beta of Priceline is 1.238. So basically, what that means is for every $1 move in the S&P, all betas are measured against the S&P. So a calculation is done that for a certain move, for a $1 move in the S&P, Priceline is going to move 1.238 in the same direction, up or down. So Priceline will move generally 1.238 times that of the S&P. Similarly, you can go to any stock. You can look at the emerging markets ETF. Its beta is 1.11. So anything above 1 is said to be well correlated with the S&P. Now, on some stocks, I know for sure, you'll see that First Solar, if you see, the beta is 2.31. That's a very, very high beta. So which means for every 1 point move in the S&P, First Solar moves 2.31, whether it's up or down. So if the S&P goes down 1 point, you can expect First Solar to go down $2.331. So that's generally what beta means. And so where this becomes important is if you feel that there is volatility in the market, how do you choose stocks? How do you choose the strategies? So now there are some stocks you'll see are not well correlated. So for example, let's take a look at Netflix. We all think that Netflix is very volatile, but Netflix has a beta of only 0.79. In fact, a better example than Netflix is actually, let's see, I think Tesla. Yeah, see, Tesla has a beta of 0.31. So if you want to do, so that means Tesla is not very well correlated to the S&P at all. So if S&P goes down, you can expect First Solar to go down very heavily, but for Tesla, you won't expect it to go down that much. So it's not correlated. So for every 1 point move in the S&P, Tesla only moves 31 cents. So the concept of beta becomes important in these kind of conditions because you can choose stocks that have a low beta. If you think the markets are going down, then you can choose stocks with low beta. But just choosing stocks with low beta is also not enough. The first step is you have to understand what the betas are of these stocks. That's why it's important to have a basket of stocks that you regularly deal in, so that you can understand the DNA of these stocks, and that's important. How many shares do these trade? For example, Tesla trades 121 million shares. It's of course come up quite a bit. Google will trade about, I don't know, my sense is about 250 million, yeah, 273 million shares a day. So things like that. Amazon is just about a beta of yeah, zero point 0.8. Let's look at IBM. IBM is 0.67. So when you think there is volatility in the market, the S&P is going to be under pressure. You're better off choosing somewhat low betas if you want to sort of blunt the move from the S&P. On the other hand, choosing a stock like First Solar can give you a very high. It's sort of like a leverage. It can give you leverage as well. So depending on what the strategy is. So first you understand what the beta is, and then you have to look at the strategies. Now, especially in conditions like these, you don't want to put a very similar trade on two stocks that have similar beta. So, for example, Apple has a beta of 1, almost 1. So Apple is moving in lockstep with the S&P. So if the S&P is going to go down, you can expect Apple to have a very similar performance. So those are some of the things that we can take care of. Now, the next step is we have to see what kind of strategies are useful. So when we talk of strategies, if you look at Apple has a beta of 1. Uh, let's look at Amazon. Amazon, I think, has 0.79. Google has 0.90. So Google and Apple are somewhat well correlated with the S&P. Google is a little less at 0.90, but Google and Apple. So if you were to put a bull call on Apple, then it doesn't make sense to put a bull call on Google also, because it's basically the same trade, and both of them are well correlated, are almost similarly correlated to the S&P, 1 to 1. So it doesn't make sense putting the same trade on both these stocks. So now, if in September, what we're looking at, I'm going to be looking more towards the bearish side, just because there are all these pressures in the markets. There's I think an attack on Syria is pretty much imminent at this point. And then we are also running into the debt ceiling and the Obamacare fight in Congress. So, there's all these are basically negative sentiments. You can see the VIX is also, starting to rise a little bit. So again, then what kind of strategies would you do? Obviously, you can do long puts if you want to keep it simple. You can do bear puts like we have on Tesla. So for example, on Tesla, we have a bear put. I have it at the 150, 140 level. Tesla is currently at 167. We are waiting for this, on this particular trade, we are waiting for Tesla to go down to about 150, 155, and that would give us a good profit. So, you can do that. You can also do bear calls, but you also want to be sure that, or you want to be watchful that you don't have too much of a negative delta exposure from within your trades. So when the markets are normal, when you think there's going to be a steady up move or a stable market, then you can mix and match your strategies. But when you think that there is a negative sentiment creeping in, then you have to worry about what kind of strategies, and you also have to worry about how you would put the trades, which stocks you choose, what strategies you choose. These two, these are important. And which stocks you choose, you should consider what the beta is of that stock, so that you understand for a particular move in the S&P how much that individual stock is going to move. So in terms of the trades for September, I would be looking at some long puts, some bear puts, some bear calls. Now, I would also be looking at bull puts for stocks that have low betas. So, we saw that IBM has about a 67 beta. We could potentially put a bull put at the 160, 165 level, because what you also want to do is match out your delta bias. If you have all your trades having negative deltas, then that's a problem. But even though you think the markets are going to go down, but you can't have a serious negative delta exposure in all your trades. So you do want to match it up with some positive delta. However, that positive delta would most likely come from strategies like bull puts. So that's the kind of strategy we are looking at for September in the trading ideas. We'll be looking at stocks that, we'll be selecting stocks a little carefully, and also giving beta as well as the kind of strategy that we choose for September, because I do think that quite a bit of volatility is going to come in September, based on all the stuff that's going on. So that's so much for that's the video for today. We are obviously looking at some of our positions, and I'll be sending out some emails on any new trades today. We should be taking uh, some new trades. I think I'll just do some analysis and send out separate videos on that. Thanks.